Well, I'll tell you what, coming up, Australia has got a glimpse of the future across the Tasman, as we're saying today, as the New Zealand economy fell into recession after an aggressive rate rise campaign that we've been talking about by the Reserve Bank of New Zealand. Now, it's not just the beating up the Kiwi economy, but also the impact of cyclones Hale and Gabriel in the past 12 months, as Sky News New Zealand correspondent Jess Maggio reports.
New Zealand has officially entered into a technical recession.
You don't generally kind of see the economy as generally fitting that label in any kind of severe sense.
Technical, but only by a margin.
Minus 0.01% is very close to the kind of like the borderline between negative and positive in any case.
Gross domestic product was down 0.1% in the March quarter. It's the second consecutive quarter of negative growth after the economy contracted by 0.7% in the December quarter of 2022.
It's still pretty unclear how the year is going to pan out because we have a weaker starting point, as evidenced by the data today. But we also have stronger migration than expected and stronger fiscal stimulus than expected.
Economists believe strong population growth is enough to offset the disruptions from natural disasters like the Auckland floods, exacerbated by Cyclone Gabrielle. Recovery is expected to be lengthy and costly. It's estimated to be around $8 to $10 billion.
We suspect that if it weren't for the cyclone, GDP growth would have actually been positive in the quarter.
Still reeling from its fair share of first quarter headwinds, New Zealand is acting as somewhat of an example to other countries on post-COVID recovery after the RBNZ aggressively raised the official cash rate 12 times in 18 months.
People have been watching the Reserve Bank of New Zealand as a little bit of a canary in the coal mine.
Economists are divided on whether Thursday's recession announcement will lead to an end in the rate rise cycle.
You're probably getting close to the end of the rate hiking cycle, but that it could be quite a long time before we start thinking about any rate cuts.
We suspect essentially the economy is still more strained and that therefore the inflation pressures could prove a little more persistent than they are anticipating and that they'll need to hike again by the end of the year.
Annual growth remains at 2.2%. Jessica Maggio, Sky News, Wellington.